And a new note from UBS points out that warehouse clubs like Costco, BJ's, and Sam's Club are still best positioned amid a tough macro environment. Let's bring in Michael Lasser. He's a retail analyst at UBS. Michael, it's good to see you. And you know, so many people are nodding their heads and going, well, yes, of course they are. But Costco shares have gone nowhere for a year and a half or so now. So what gives?
That's exactly right, Kelly. And the reason why they've gone basically in line with where they've been is because there's been some questions around what's happening with the consumer. There's been questions around its premium valuation, along with what it's going to do with its membership fees. We think all of those questions are going to be answered in the months ahead, and that's going to be good news for the stock. We think the most likely case is that they're going to raise their fees this summer, which will provide a pool of profits that they can reinvest back in the business and let some of it fall to the bottom line. Our surveys show that the consumer has such strong affinity for Costco that it's willing to accept higher price because it sees so much value. And ultimately, this is going to be good for shareholders.
Listen, I'm not just saying this as someone hoping my fee doesn't go up. There's a reason why they didn't raise the price of the hot dogs, right? There's a reason why they didn't raise the price of the rotisserie chicken. These are huge things that would turn off their core customer base. They know their core customer base is struggling right now. Why raise the price of the membership fee? Do they really have to?
Well, I think you just answered the question that they haven't raised the price of the hot dogs. They haven't raised the price of other products. In fact, they tend to charge only at most a 15% markup on their goods.
Right.
And you can't find that anywhere else. That alluring value is the number one reason why people shop at Costco. It's the low prices and high quality of the merchandise. That's not going to go away, even if they charge $10 more per year to shop at the club.
And, you know, we've got this bifurcation in retail right now where the very high-end LVMHs of the world, the luxury is doing great. And then the bottom where very value-conscious, price-conscious consumers are realizing value. But we also have more and more pressure against that low end. For instance, the tax refunds, which have always been one of the most important one-time windfalls for working-class families, are going to be $20 billion less this year than last year. We heard Walmart talk about that during their investor day. Do you see that as a potential problem in the first quarter and going into the second quarter?
We've already started to see that have an impact, Robert. In March, their sales of highly discretionary goods like furniture, consumer electronics were under considerable pressure, down high single digits year over year. And that was most likely a direct result of consumers having less access to this windfall from tax refunds that they get during this time. The important point is that tends to have influence in March and in April. And as the season gets away from that, it becomes less influential.